Reader on the theme set to drive markets this week, Pete McGuire from XM joining us now live. Pete, good morning to you. I hope you had a good weekend.
Good morning.
Not as if you could do anything, so I guess you were in a contemplative mood then. Let's just take a look at what's going on locally. So we know, in fact, we're getting the Reserve Bank minutes released tomorrow, and
Yes.
they're sort of flagging their adjustment, certainly as far as quantitative easing is concerned. However, now we find ourselves in this situation where we've got this severe lockdown in New South Wales, particularly Sydney, a short, perhaps, lockdown in Melbourne. Are they perhaps tweaking their outlook at this point?
Well, they may be, and good morning, Andrew. They may be, and that always throws a big spanner in the works, as we know. So it's very hard for them to forecast when you're living through these lockdown periods and how long do they last for and what issues do they face, and are there more between now and Christmas? So I think they're very conscious also as far as the inflation numbers, asset price appreciation, and what we'll see as far as mood and what's in the actual minutes, Andrew. So I think, hand on heart, it keeps on keeping on as far as there won't be a rate rise, and that's what they're telling us till 2024. So I'm not sure where the Aussie dollar will be by that time, but maybe the Kiwi will be ahead of it.
Yeah, and of course the other issue to consider too is now that news that construction has been this is in New South Wales, all construction activity has now ceased. That's going to have a lot of knock-on consequences, isn't it?
Absolutely, all through the supply chains. And my son's works in construction, and he was told on Saturday that he's off for 2 weeks. So yes, it has a huge impact, as we saw those trucks rallying and across Sydney blowing their horn. So a lot of people aren't happy about it, Andrew, and what impact it has to, I suppose, debt serviceability. How long does it put a handbrake as far as the completion of projects and all of the trades and everyone else associated with it? So that whole supply line is impacted very, very quickly. And it just seems to be a work in progress, how it'll play out.
Yep. Meanwhile, we just have to look across the ditch to see what's going on in New Zealand at the moment as far as inflation. That second quarter inflation was really sharp. So that's, of course, brought forward some of those expectations just as far as a rate hike is concerned.
Yes, absolutely.
How are you looking at that at the moment? I mean, I guess, we compare that with Australia, where the RBA was looking for some normalisation. That perhaps is a little off at the moment, but clearly, very different picture across the ditch.
Absolutely, Andrew. And they're looking now. I mean, we were always talking over the last couple of months that it was a November headline as far as a rate rise, kicking off in November, maybe even December. But now 88% of probability of a rate increase next month. So that shows the aggressiveness and the stance as far as the Kiwi and what's going on there. So inflation fears could ease. The RBNZ actually raise rates sooner than later. What impact it has as far as the cross rates, it's going to be a fantastic trade scenario from the Kiwi appreciation. Naturally, I think it'll be a very, very strong move from traders, and what they'll expect very strong against, of course, the Swiss franc, against the euro, against the yen. Those currencies won't be raising rates, and so I think a carry trade and good profitability available.
Okay, all right. And of course, inflation very much a focus in the States at the moment. We saw some strong retail sales figures, although interestingly, sentiment has come off. And perhaps this is part of that broader story we're seeing just as far as the threat that the Delta variant of COVID is facing as far as the world is concerned.
Well, that's right, Andrew. In the States, they're saying the numbers are increasing and increasing quickly. So there's the first part of it. We've also got PMIs coming out this week as far as Eurozone, UK and USA. So it will be very interesting to hear, the storylines coming from emerging markets and the impact that COVID, the Delta variant's having to emerging markets like India, like Indonesia, and all through Asia. And naturally, again, supply lines and how long it actually, takes to work through. So, it's a hard one to even comment on because of the uncertainty that it presents. So as far as from a trade perspective, I think you've just got to be very conscious, look at your screens and really be focused on, taking profits as quickly as you can.
All right, and the UK, that's Boris Johnson seeming to ease those restrictions, so that's certainly going to be in focus to see how that plays out. Meanwhile, the ECB, Thursday, its meeting, what's the expectation there?
I don't think they're going to be in for any surprises, Andrew. They're conscious as far as the inflation story, and that's a concern all across that Eurozone. So, and how they trade as far as the summer period, the unlocking of economies, and this is their tourism sector. So I'm very conscious as far as our European workmates with XM, they're travelling across the continent. Let's hope that it can stay open and, they put the bad news behind them. So that's going to be a good sign. But the Eurozone is a different matter completely as far as asset purchases, and with inflation and with no talk at all on the horizon as far as raising of rates versus, what we're seeing in the States and certainly with the Kiwi.
So, Pete, overall, as an investor, particularly locally, how should you be treating the markets at the moment? Is it a matter of caution?
I think so, Andrew. I think you've got to also be conscious that it's had such, if you're looking at equity markets, I mean, they've had such a huge move to the upside. So there's, nothing goes up forever, and the inflation story, and you start seeing rates. So, a trader's going to look at, well, I'm not saying a return to cash, but possibly, be conscious as far as what markets have got more upside and what markets are fully priced. So there's that side of it. Secondly, always hedge your positions. That's a very wise move for traders. And be conscious, I think, two things, Andrew, if you're going to, I made a note of this, two things for traders. They're off in Sydney today. They're, everyone's on, working from home or being stood down for 2 weeks or a couple of weeks. Look at two things to study: backwardation and contango. That's what they talk about in the futures market, but it's very applicable to all asset prices. If you're trading and you're hedging, what's happening in the next months? So a year out from now, is the price actually going down or is it going up?
All right. Always worthy to get your tips, Pete. Really appreciate it. Have a good week. Thanks for joining us from XM.
You're very kind. Thank you.